Hi folks, Nick Shaheen here, recapping the week ending March 20th. And it ended in a green day. Green across the board. The Dow is up 0.9%. Same with the SPX. Same with the NASDAQ. A little bit less on the NASDAQ, 0.72. However, it was leading up at one point. The RUT down, up 0.91%. So overall, a bullish day on the scoreboard. However, not so bullish if you look at what they left on the table. So the highlight, I guess I would start with having, yes, finished a fantastic day. However, look at it. It's still trading right now in the last 15 minutes here. This is the NASDAQ. Look at the high. Look at where they left it. And then look at where they are. They are at the lows of the day. It's not red because they opened up based, again, on non-fundamental reasons to run up. Greece headline added probably 8 points, plus there was some Fed talk that was pretty bullish. You know, it's just non-fundamental reasons that have not changed the macro thesis that keep running us up. At some point, we will have to stop and say, okay, so what positive catalyst do I have so I can put my money behind? At this point, there's nothing new. Everything is known. All right, so you can see maybe a head and shoulder pattern freaked out some technical analysts that brought us down here. But then you see the shenanigans that went on in Apple. First of all, Apple, I can't believe it. It closed down 1%, but that is not so what happened. Let me zoom out. This is Apple. Look, if you look at Apple here, all day long, it was, you know, plus 0.2%, okay? Plus 0.2%, give or take, and then suddenly, whoosh, down to 125 in an instant. So obviously shenanigans going on there. To what extent, for what reason, I have no idea. And at the same time, you see spikes in names like Tesla, so maybe some money rolled over from Apple into other momos. Momentum stocks through the roof. It's hard to find anything red today, really hard to find anything red. So the VIX, speaking of red, is down close 7%, which is an overkill. This is an overreaction to only a 1% up in the market. A few names that were outstanding today, Biogen IDEC, they have some great news about new drugs down to very, very promising drugs for Alzheimer's, which I hope they find. Is up almost 10%. So you'd think that the biotechs are all flying. No, not so. The IBB, in fact, was red with minutes to go to close. So let's go to the market watch. This was not minus 1%. It was green until the last minute. This is Biogen IDEC. And you can see that healthcare in general is somewhat strong except for these two. Now, there was a weird divergence in the healthcare, and I'll tell you why. The small caps were lagging all morning long, and I was wondering why. And here's the small caps, and look at their healthcare, super red. I'm not sure why, and that's why they weren't leading. They were dragging. So money flowing out of here. A company like ISIS, for example, down almost 5%. ISIS Pharmaceuticals is well known. So that's the biggest one I know here. So maybe money flowing out of here into the supposedly can't lose situation with Biogen IDEC. This all by itself is responsible for about 0.15% of the 0.7 of the NASDAQ. So now the NASDAQ is not only in 5,000 territory today, most of the day, but then now they're, you know, within, I think it came within like 18 points of the all-time high. So once we hit the all-time high in the NASDAQ, what's left? We've got NASDAQ all-time high. We've got Dow all-time high. We've got SPX all-time high. We've got small caps all-time high. Japan and China all-time high. I think Germany is an all-time high. Who else in Europe is all-time high? I'm not sure. And then you've got rates in the toilet, and you've got bonds rallying, and stocks are rallying with bonds. So what's next? Okay, so where do we go from here? Financial engineering into new further all-time highs? I don't know. You got to show me that you can grow your dollar as far as a company is concerned. Stop reinvesting in your own stock price, because all this, you know, if financial engineering will have, you know, that's great. They're returning value. That's awesome. But at some point, you're going to have to invest in your pipeline because, you know, I can't just buy financial engineering forever. So today was a win for the bull, no doubt. And as far as the week is concerned, let's go check how the week turned out. And this will give us a the sense of volume and the sense of direction with everything. So I'm going to go to the SPY because that gives us volume. Okay. At one point, we were all scared we were going to sell to zero, right? And then suddenly, bam, all kinds of good stuff happened. Volume is the same as last week. Each candle is 1 week. That's 1 year. This is the October correction recently. This is the other, call it correction if you want. You know, this funky candle here, that was a preview of the high that was to come later. And here we are, very close to the high. So I don't want to draw a line. I don't want to jinx it. So we had 3 red candles, boom, 1 giant rejection, okay, of that red trend. So the trend's still living there. That's the week in the SPYs, and that is the S&P 500, the S&P index that's heavily traded. The Qs would represent the NASDAQ. Again, 2 red candles, you know, 1 iffy candle before that, and again, rejection, close to the all-time highs. Let's look at the small caps. They should be above the all-time highs because they are currently in all-time high situation, and boom, breakout. That is a categoric breakout, okay, and they have been the healthiest. I'm going to extend this out because now it becomes relevant as to, extend to the right. Look at that, nice kiss. What happens from here? Technicals follow breakouts, and if it can close above that next week, maybe they call for even more all-time highs. The lower end would be, now we have a, I don't call this, this is a rising wedge. And so you see it is tightening. You know, look how wide it is here. It's tightening. And it's ping-ponging, becomes top of the bottom. Touches the top, touches the bottom, until one breaks. So either this breaks or that breaks. So if it touches here and it reverses to the bottom, you want it to bounce off of here to come back and bounce on here. If it comes here and loses that and closes down here, a drop will ensue. Okay, and so I'm not calling for that. I'm just telling you how the technicals line up. All right, so that's the weekly look. I also like to look on the daily. This is the IWM daily. Again, we have this upper end, and we're coming to kiss it right here. Look how high the wall of this wedge is, if I want to call it a wedge. I don't know what the heck this thing is called. It's called a chutes and ladders. Look how steep this rise has been. And it was a complete breakout off of this area right there. Emphatic. Okay, so there's no, and volume is decent, just as big as yesterday, just as big as the day before that, and bigger than the red day that happened like eons ago, it seems like. All right, that's the small caps. The SPY hasn't been this rosy. It's been, you know, off on, red, you know, look, red, green, red, green, red, green, red, green every other day. They did not match, the bad thing is, the good thing is that now they have a small trend, too many lines, right? But they did not match the high they had a couple of days ago. And I think they closed just about the same, so that's good. So, but they have had higher lows. That's also good. You want to see that. But we are bouncing this green and this red area. So that's what I'm looking at. There was this green area here, but it's been busted or thereabouts on it. We'll look at the same. Volume is pretty nice, bigger than the red days. That's what you want to see. Bigger volumes on conviction buy days. The Qs represent the NASDAQ. Again, nice gap up, and the candle's not so pretty because they left so much on top. Let me zoom in. First, let me show you that we're playing with this range right here. Not to say that this is where it's coming down, okay, but I just wanted to show you that before I zoom in because that kind of becomes hard to see. I wanted them to hold these 2 green lines and this orange line right there, and they did. They bounced right off of it, exactly. And here we are. Okay, now we have a nice trend going up. What to do now, right? So dirty way to draw it. Again, kind of like that other pattern. If you break out above it, more highs to come. But they didn't match this candle right there. But they are, oh, dang it, earlier today they were like up here, so they were going to close higher than the, anyway. So they are within the same, this one right there. So I'm going to extend that. This is not a scientific line. Oh, it's an ugly line, but we'll leave it for now. It just tells the story. Volume is decent, so I don't like the fact that they left a tail, meaning they got to here, but then they closed lower, a lot lower. Still a win for the bulls for sure. So what do? I peeked into next week's open interest, and I could not, obviously I don't have a definitive range because I don't have the data from today, what happened today. This week, I can emphatically say that the bulls left a lot of money on the table, especially in the small caps. There were a lot of bets at 1280 and 1290 that did not pay up in the calls. So And also there was a lot of money short at 2000, at 2025, 2050, 2075, 2100's one. That's where it pinned. I believe 2099.07 or '05 was the close for the SPX. So anybody that bought calls above 2100 did not make any money on them, and they lost all their money. But all the ones that were betting short below that are underwater. So what did they do with their money? How did they roll it into next week? Currently, before today's action, next week looks bullish. The setup meaning has a lot of support below 2100 and not a lot of resistance above it. And that goes across all the indices. So I would be concerned if I was purely short and into next week. I am a lot of shorts, but not into next week. I'm cautious. I'm out in time. I'm higher. You saw my note today. So the fact that this is how they lined up, that doesn't mean that's how we're going to open on Monday morning. Stuff happened today, quadruple witching. So how did they end up closing the week and rolling their positions out? Did they roll the same positions? In other words, am I going to see a high short level at the 2000 or between 2000 and 2100 or in the middle? Where am I going to see them? I'll have all that information for us before the open on Monday. So then we can trade going forward or have an idea. So again, we've been popping on froth. Greece, are you kidding me? And I think we kind of sold off a little bit on some Ebola news today. What? I mean, I thought we were bigger than this. We've moved past these. So we're moving on headlines. Sentiment is very fragile. Yes, we're at all-time highs, but that's why they can push the button, the sell button, faster than anything, because it's nothing but profits, except for people that are stuck 15 years in that all-time high in the NASDAQ. Will they now push the button to sell everything and get out even? So I don't know. They've seen it happen before, so maybe their memory is still fresh. But we are at all-time highs. We have to respect that. Breaking the all-time highs will invite more money in. Alternatives are not there. I don't know. They keep saying that. I just can't believe it's this easy to invest. So the dollar was down today against everything. So yen was up against the dollar, euro was up against the dollar, and people were surprised. You should be surprised because the dollar has been up against everything forever now, it seems like. So one day it has a bad day, of course it's going to be down against everything, except if somebody tightened, and nobody's tightening. All the central banks are manipulating their money. I don't think we've ever had that before. Everybody's manipulating their money, including Janet Yellen. She doesn't tighten or raise, but she walks the dollar down or up with her words. She can effectively hike rates with just her words, what she says or what she doesn't say, and vice versa. So she can still do that. So I don't know if they're doing that or not, but it is what it is. So I don't jump in and want to be a hero. I want to short everything, but I'm being patient. I'm deploying a little bit at a time, deploying way out in time, and the yield could be 10%, 20%, even more, but I'm being patient. I'll wait 6 months for me to make all of my year. That's fine, as long as I keep my trades under control. I'll do a special show about that. So where we stand for next week, it looks bullish. And so if I mentioned first thing in the morning, I would like to take some calls. A lot of people came back, okay, I chose this, I chose that, I'm long this, I'm long that. I personally just did some straight up IWM debit call spreads or broken wings, and I've explained those before, but something that I would participate on the upside. And last minute, I bought some put spreads in the SPX out in time, just in case we're going to give some back. Just small debit put spreads, not lottery, because I do believe we have to pull back a little bit, and I gave them out in time into April. So, but nothing major, just a starter position, let's put it that way. So what to do? There's no rush to do anything. Absolutely nothing except study and stay out of trouble, period. And you can still make money. Whether you cash it in today or not, it's not the point. It's where you end up at the end of the year. If your goal is to get 10% on your money, 20% on your money, and you get there, it doesn't matter if you do it this month or next week. You don't have to do it all in 1 week. I've had a couple of people get in trouble, but it was entirely avoidable, and they just didn't follow their own rules. They knew better, and one of them got lucky completely, and the other person can still save things, and I hope they acted today in order to save it. But the point is, both mistakes happened exactly the same way. They ignored their rules. The rule is if it gets to a certain risk level, meaning if it's so close to a coin flip, like if it's only 50-60% chance of success, that's a coin flip, then you're just invoking hopium. You just have nothing going for you except, I hope this doesn't happen. I hope this doesn't happen. Well, you can't leave big money at risk in the face with just based on, I hope this doesn't happen. That's just a lot of risk. Highly unadvisable, and then you end up, Nick, how do I save this? Okay, so luckily one got out of it completely unscathed, and the other person can still save it, and hopefully they already acted. If not, they should act first thing on Monday, unless we crash, of course. So anyway, those are my 2 comments on that. So don't wait too long. If you've got something going wrong, just say, hey, I've got this. It's starting to glow orange. What would you do? I'll just tell you. I won't tell you what to do. I'll just tell you if this was my position, I'd do this and I'd do that. So maybe that's the advantage of having this community, because you save me from making mistakes as I will save you from making mistakes. All right. So keep patient. There are a few names that I wanted to talk about today. Let's see if we have time here. Who cares? It's the weekend. We got plenty of time. Tesla had a good turnaround today. I am short of via debit spreads. I left them on. This is not a very pretty candle, and it's still below that orange line. If anything happens wrong in the market, Tesla will be first to go, one of the first to go. IBB, that's the ETF for biotech. Today had, it closed a little bit green, but look how much money it left on the table. This, this candle is pretty, not very pretty, because they could have closed it here, but they didn't. They closed, where is it? 366 point something down here, but they were as high as 375. Okay, so that's not a pretty sight. They saved it last minute, but it wasn't very good. So anyway, that is the IBB, which is surprising because BIIB, Biogen IDEC, look at that. Boing! And then they tried to sell it, and then it rebounded way back. It is a doji, meaning it's an indecisive candle. Why? They opened here, a gap up, mind you, right? They opened here. They tried to run it, and then they said, no, wait, too high. Sell, sell, sell. They tried to sell it. Yes, yes, short it. No, wait a minute. What are we selling? It's great news. Buy, 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 buy. They closed it exactly where it opened. Look, I can hide it behind my cursor. So they don't know what to do with it. That doesn't mean the next day it's going to come down. It just means that it's indecision, and usually the next day it's a big move one way or another. Most times. Like this time it was, this time it wasn't. Well, I guess it was a negative move. So usually dojis are followed by big moves. I'm just going to say that. That doesn't mean short it. If their pipeline is correct, then they should make a ton of money. Okay, so those were 2. I know there were more. Hold on. Greece, I can't believe it. I just can't believe it. All right. New home sales. I have a friend of mine who is in the business of roofs for new construction. And he tells me that his business fell off a cliff recently, and his lead time is about 3 months. So I'm interested in seeing the next reports when it comes out with new construction. I don't know when those come out. I know we have new home sales coming out soon, next week, I think. So maybe the new home sales was the trigger for his orders to fall off from the manufacturer, so from the builders. So maybe, just maybe, the new home sales are going to come out bad, and it might trigger a sell-off in the market. I'm not sure. That's highly speculative, assuming that my friend knows what he's talking about. Okay, hopefully he's not watching this. All right, so this week, a lot of, yesterday I said it could be considered a win for the Bulls and a win for the Bears. The win for the Bears that there was no follow-through. Guess what? The follow-through came in today from 2 days ago. Once again, we got party hats all over the place. Everything was up, even gold, bonds, and oil. Oh, yeah, oil. Hello. Forgot to talk about oil. Oil, yeah, look at this. It's a pretty ugly candle, right? But it's up. But it left a lot. Like the ramp, even oil went up on the news of Greece deal. and to 47 and change, and then I hear comments like, oil is ripping. It's not ripping. It's fighting for its life. It can't even break over 50. It's not ripping. It's coming out from the toilet into the rim of the toilet, so it's not ripping. And then it gave most of it back. It's still up 1.7%. Okay, the other two things we should look at, since we always talk about these, the TNX, which are the 10-year rates. These should be heading up, and banks should be heading down when they're heading down. So today they were down 2.5% almost, and banks were up. That shouldn't be. Something is wrong. So here's what I'm looking at. Is this a baseline for them? Are they going to stabilize here? Because look, they have stabilized here before. I'm going to draw a line like right around here. It's not a scientific line, but it's an area of bounce. See that? Boing, boing. So is this another bounce? So are we trading this red range and this red range now? Or no longer this green one and this green one? We clearly broke this orange one, so that's what I'm looking at. I can no longer predict how that's going to affect the markets, but today markets are up. It was red, so I'm just going to assume that next time this is green, markets are going to be red. That's a complete assumption, if you know what I mean. Conversely, the TLT is if TNX goes down, TLT goes up. That represents the bonds. Look at the rip, and whoops, I've called this one so perfectly, and I can't believe I haven't traded it more often, right? Because I've been dead on it. You'd think I would learn at some point. So now this orange line comes into play. Look at that. Kissed it and redrew 3 times now. But look at how tight the range has become. It's from here to here and now back up to here. But look, now we have a little beak. What now? More upside? 135 again? I can't imagine markets are going to rally when bonds are rallying. If so, then that's not good news for the markets. However, today this was up, markets were up. So that used to be the case. I don't know if it is the case now. I think the SPY went ex-div today, so dividends may have had something to do with these movements in the last minute, so I don't know about that. Alibaba was red today. Who knows why? Let's see here. I did make, okay, the variables that are in play, we've talked about them already. Rate hike, 11, the Fed, at 11:35-ish my time, Fed Evans came out and basically said rates are not going to rise until 2016. So that would explain if he had anything to do with it. But he's a dove. He's always pro keeping rates low, blah, blah, blah. So maybe this accounts for the 10-year rate to be lower today. And then somebody else speaks and they take the other side of it. And so anyway, so the strength of the rally scares me a little bit. All right, that's all I'm saying. All right, the oil, we spoke about the oil the other day. There's enough about it. We're in phase 2 now. Who's going to do the cleanup? We've already talked about that. I did have a few things as far as tickers. Celgene was one of them, and let's go visit Celgene. They were all in the news today, these guys. And look at this candle, very nice. Somebody asked me, is it time to chase it? I can't chase momentum this strong. It has a habit of going up and dry, but maybe it's headed towards that orange line. So if I extend that orange line, maybe it has a few bucks, maybe another $5 in it. So if you are a person that likes to play momentum, hey, why not? Look at that. It goes up to the orange, drops, goes up to the orange, drops. This one failed, but now it broke out. If I draw a line here, from its last couple of failures, so maybe I can, dirty line, but hey, you get the idea. Maybe that is it's definitely a breakout, so maybe another $5 in Celgene. It's not for me, but it's somebody who's a momentum trader. And look how nicely it respects this green line, except for the October collection. Ignored. Starbucks, S-Bucks, I think it was red at some point today. Oh, it's red close. So is it respecting this green line right here? Look at that. Touched it, poked it twice. A lower high than yesterday. That's not good. On an uber bullish day, maybe, just maybe, Starbucks has some redness coming into its way. Whether down to this green line or down to this orange line, I'm not going to say. Or maybe it continues on to this line. So maybe at 100. So, but starting nibbling on some shorts in Starbucks via debit put spread may still make sense. We talked about the RUT. Oh, RUT, I said I'd like to start shorting it again via the December, is this the RUT? No. December 1460, 1470 credit call spread. Why? Because of the fact that I don't want to stand in front of the bus right here. And I go to December, I can still collect $1.20 for a risk. I'll yield, you know, over 10%, and it's probably 15% if I'm doing the mental math. And I can accomplish this using the IWM. Now, this is a breakout. See this? It's not a scientific line, so it could be considered a breakout, but we've had this before. So if I wanted to adjust it, I would really have to draw it like this. So this might have legs, right? So this is just 1 year, but this is an all-time high. And it also respects the bottoms pretty nicely, right? But when it breaks, whoosh, 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 it breaks. So be careful. These are rising wedges, and if they do break to the downside, they break down, but there's no sign of breaking down here. So that's why I'm going out in time. And I also said that you can do that same thing using IWM. So here's the IWM rising wedge, correct? And it still has room just like the RUT. So let's say it's going to get to 126, 127. Well, I can go out. There's no December contract on the IWM yet. So let me go there. Computer has been working hard. So if I look down, I don't see December. Is this December 2015? Huh. Oh, these are the quarterlies. Okay, so it's not the actual monthly expiration, so I can choose the November if I wanted and go all the way up to 145, I think, 140, 145. See that one right there? Right there. 140, 145. And I can collect enough premium there to make it worth my while. I forgot what it pays, 76 cents in premium. So the yield is a little more aggressive. The room is not as big as the RUT version, but it's certainly doable, especially if you want to do an iron condor. And it's $5 wide instead of a $10 wide. If I wait a little bit, they'll give us the contract for the December trade, and maybe we will see it soon enough, and it'll look something like this. See, $1 wides. And then you can choose $1 or $2 wide spread. All right, so there's no rush. This is a December trade, folks. And you're saying, oh, boring, boring. Well, who cares how I make my money if at the end of the year I got 20% yield on my money? So if I started out with 100,000, I have 120,000 at the end of the year. That's somebody's salary in some parts of the country. In one trade, this is just one trade. So you set 2 or 3 trades like that, you don't have to sweat it. How can I get to 20%? Currently, it pays 15% all by itself, the one leg. I can either go higher for even more safety and then add a credit put spread on the RUT. We're talking now. So I have the 1460, that's way up here. And then I can go down to under 1,000. This is if 1040. I can go to under 1,000 and do a credit put spread that collects another 80 cents or so. So now I'm collecting, let's call it $2, and the yield is way better than one leg all by itself, right? Because now it's $2, and the total risk is only $8. So it's 25% yield. Why is it only $8? Because you can't lose on both sides. If price goes up, this one wins, this one loses. Price goes down, this one wins, this one loses, so you can't lose on both sides. So it's the same dollars at risk, yet you double your yield almost. There's 25% yield from just one trade. All you have to do is just manage this long distance, far out of trouble. You leave plus or minus 20% of price movement, price buffer, whatever you would call it. So these are long distance trades that I absolutely love, love, love to do. Somebody said, is it time to short Amazon, short Netflix, and all of that? I'm not going to bother with anything. I want to see how committed the bulls are and how quickly they're going to hit the sell buttons. As it is right now, next week, they're looking a little bullish, so I'm going to give them a little rope. Let's see what they do on Monday, and we'll circle around. If you have any questions about what I said here or any general questions, let me know. Sorry about the length of this video, but it's a weekend version, so you got time. It's 29 minutes. Sorry about that, folks.